Welcome to Trading Lounge and the European Indices for the 15th of May. I want to start with the S&P 500 though, because it's going to be one of the driving factors. And with the S&P here, as you may know, we're looking at 1 and 2 and 3 and 4 and 5 here for wave 1, and then an A wave and a B wave and a C wave for wave 2 here. The market hasn't actually pulled down to the 50-60% retracement level. It doesn't have to do that, and it can. It could also, once it moves above this little box here, which is the 50-60% retracement level, then we can confirm that this wave 2 is in play and we'll be looking for wave 3 to go to the upside. So in a nutshell, we could say the closest largest number is 2900 here. If that becomes the support, then it's confirmed that we're going to be going higher from that point and we won't be coming back down to this box. It's possible to come down to this box here because we'd have to count that as wave 1 and 2 here, and then 3, 4 and 5 coming down through here. So that's possible as well at this point, but our bias is for wave 2 being in place, and that's based off wave A here having some equality to wave C here. But at the same time, just be mindful that we need to be up here higher on support at 2900 here to confirm that. I could also say too that the current little move up through here is looking rather impulsive rather than corrective, but that's still unconfirmed. But the bias is to the upside at this stage, but these are our triggers, the 2900 here for this. So this would leave other indices around the world, the Asian indices, the European indices in the same boat as well, not pulling all the way back to their spaces. But understanding this basic pattern here that's dragging the other markets around with it, well, really the Nasdaq is the one that's stopping the markets from pulling back lower into these spaces here. So let's just go into the DAX here. This is the DAX here, the same concept, the 1, the 2, the 3, the 4, the 5 for wave 1 here, the A wave here, the ABC for the B wave here, and then 5 waves down here. In this case, we've taken the low out here. On the FTSE, we're about equal to that. In this case here, we could look at this number here, the 10,500 here. If that becomes the support, then we could go along from that point there. Let's just go in and have a quick look at this here. So when the S&P hit 2800, you should be out at this level here, so we don't need these anymore. We're looking to be on the long side here now. So what we can do here, if the market's going to fail, then this is the first failing point that it's going to fail from. The second point here that we could look at as well is, well, it will just give a bit of headway up, which is the second one here as well. I mean, but that's the thing with markets, you know. So as we move up through here, it basically mirrors itself against these, you know, these resistance points over these volume blocks over here. What we're looking for here though is the classic trading levels pattern here, the arrival, the reaction, the first high above the level, then some type of ABC correction, and then up from there. I've probably made that a bit bigger than it really has to be there, but you know the general pattern anyway. There's two of them. This is the first one called the classic trading levels pattern, where we have the arrival, the reaction, the first high above the level, then the ABC correction, and then taking out these tops here or just getting support back over here is good. Well, in fact, this big pattern here that we've got here, this large pattern here, there'll be a mini version of that in here. So you can really refine the entry, but the entry would be the top here, then this one, then this one. But you could also use this one to get in, add to the position on this one, and add to the position on this one. The only variation on this pattern here is where it doesn't make a new low down here and just finds a nice support here and then moves up from that point. But we still have our high to go long on here, and we should be able to get a second high to go long on at that point there as well. That's how it migrates from being resistance to support, and that's how you can trigger your way in. So that's the safe trade to the upside at that point there. So the FTSE will be the same as well. So looking at the FTSE and just cutting in here, we've got this A wave here on the 4-hour chart, the B and the C wave here. Yes, it hasn't made a new low from this point, and the structure coming down from here, it doesn't fit very well as 5 waves. It does, but it fits much better on the cash market than it does here. But if the third wave's a bit screwed up in here, but on the cash market it's moved down quite nicely and has a nice 5-wave structure here. The same thing applies here as well. So for the first trade here, we want to see the market prove to us that it can go up from here. So we want to have support on 5,800. Otherwise, we won't go in at that point. So on the maybe 1 hour chart here, we look the same sort of thing as we just talked about on the DAX and so on. So it can fail from this point here. This is just a retest here. So it can fail from here, but if it does find support here and moves with the rest of the world, or if the rest of the world moves up with the FTSE, whichever way you want to look at it, then we go along. Anyway, we're just looking for setups. We try to be right with the Elliott, but obviously it's not going to happen all the time. So we need to strengthen our Elliott wave by using support and resistance, and that's why we use the trading levels. And we know that 8 is the third strongest number in the market, so we know that it's going to give us a bit of a headache here. And if it does find support on 8, well, then we can move up from that point. That's all I'm saying at this point. Yeah, so that's really it in a nutshell with everything. We're just looking at working out now if we've got our lows in place for these, and we'll see how we go. And you'll know what levels we need to move in on. So I'll leave it at that. And thank you for your support, and enjoy the weekend. Cheers.